Hi there, traders. Okay, now it's time to focus on the upcoming US CPI data. Right, we've been waiting for this week, all week, I should say. The market's been waiting. We've had the US midterms. Okay, not maybe such a resounding result for the Republicans. So a little bit of pressure off the dollar there. So let's just have a look, break it down, because this is as good as it gets as far as simplicity. Now, we do have the US numbers coming out now. What the market's been focusing on, if you look around, it's all about inflation's been above 8%. So obviously they are looking at this number here, right? The inflation number. So you got month on month and year on year. Then you got the core inflation numbers there as well, right? It's like a backup number. Like years ago, the core inflation numbers weren't there. It was just the inflation rate. So we've got an extra variable there to think about. But really, the market is looking at the year on year. That's what the Fed is referring to in all their text statements, press conferences. It's about getting this year on year rate back down to 3%, right? Hell of a job in front of them. So last month it printed at 8.2%. This month, okay, we're looking at 8%. So month on month, the forecast is for a 0.6% increase. Now, this is important because, I mean, the previous number was 0.4. You can't see it on this page, but the range for the month on month is 0.4 to 0.6, right? If the month on month number is outside that range, right? If it's higher than 0.6, say 0.7, obviously it's going to be very dollar positive. If it's below 0.4, it's going to be dollar negative, right? And that's pretty much the same for the consensus. What you're looking for, on the year on year, if we get something like the previous number was 8.2, right? So they're expecting a 0.2% drop, right? So if it's 8.2 or above, you know what? The Fed are going to have to keep being aggressive with interest rates. It takes out the market positioning after last Friday's non-farm payrolls, where the unemployment rate was weaker and we saw a big dollar sell-off. So there's a lot of dollar positions have been squared up. So strong numbers, you know what, gives the US dollar, in my opinion, another month of strong activity. But that being said, the consensus is 8%. So if we get a number at, say, 7.8%, I tell you what, it backs up the weak unemployment rate numbers from last Friday. And this could be, I tell you, all the media will be signaling this is the top of the market, right? As in top of the cycle. It's going to take pressure off the Fed and maybe won't see them cutting rates, but maybe taking the pressure off these 0.75% increases. So that's what we have to sort of look for. So when it comes down to the number, now there's a number of different things here that you need to be sort of thinking of. And one key part is, how is everything technically set up, right? To me, there's a huge amount of pressure points. The flush out last week after the non-farm payrolls flushed out a lot of dead positions. Now, the Binance deal with, they were going to buy FTX. Now that deal has fallen through. Massive pressure on cryptos, right? So if you've got cryptos, just be aware. If you're not aware of that news, you're probably already out of the game. But what I'm talking about is, what I ideally want is I want a pressure build up in the technical levels of an instrument. That's a pressure build up. Then you get the fundamental overlay, which is the US CPI numbers. And that can give us a really big resounding one-way move. Now, so what you're looking for is, okay, pairs that have really good technical setups, like the Dow Jones futures here. You can see this coming right back to support. It's right there at the moment. You would love the US CPI numbers to come out now, because this thing is at a critical level. And that's what we're looking for. We're looking for critical levels here. Euro, okay, top side, back towards resistance. Okay, massive flush out of those long dollar positions after the big move after the non-farm payrolls, but it's ready to go again. As I said, weak US numbers, Euro's up 100 points. Strong US numbers, it's back down towards support. So we're going to see moves here across the board. Now, I tell you what, the market is very concerned about everything that's going on. Check out the move in gold, right? Once it broke through, finally got through the barroom brawl there in the on resistance there around 16.70. It's shot up here, right? This is telling you that the market is expecting volatility coming into the US CPI numbers. We're starting to see oil start to fall back again. Right? It's broken down through support. Next support level down here towards just under 83. The dollar index, well, it's picked itself up off the floor. NASDAQ, well, it's not as critical as the Dow Jones is, but I tell you what, you're going to see some significant moves here on the equity markets, right? If I just have a look at the FX currency levels, once again, you're looking at levels. How are things behaving technically? So just looking at the dollar index, you can see here this previous support level, how it was sort of chiming around, finally broke through. It's now coming back above that level. So strong US numbers, you got to think it's going to be heading back towards 112 on the index. The Swissy, well, it's already left the building, right? Now, I did adjust on that other chart on the euro. I did adjust the level. I'll be adjusting this high here to the most recent high. That gives us a target on the top side, but it's back in the range there as well. You can see how, and this is what I'm talking about, where positions have been flushed out and it opens the door again for another big dollar move, a big strong dollar move. Okay, euro has, after the non-farms, flushed out some stop losses above 10050. You got sterling stops triggered, Aussie stops. I mean, there was no sort of major technical levels broken on the Kiwi, but it had a nice little peak there as well. And you're seeing a flush out on the downside here in dollar CAD, dollar Swiss, and even the dollar index, right? So dollar yen, well, it broke down. It is coming back to test these levels here, but dollar yen's been doing a bit of its own thing. Okay, whether it's a safe haven, whether it's just people parking their cash in the yen. So with these pairs, right, now that they're back in the, not quite in the middle of the range because euro's still right up there, this sets us up for a situation where the market is almost neutral, right? What we mean by that is the positioning of the market is sort of square, so they don't know whether the dollar goes up or down from here. And this is why those US numbers come in at the perfect time, because this is the answer. Do they go up or down? Well, it's going to depend on this number here. If it's stronger, the dollar rallies. If it's weaker, the dollar falls. It's pretty much as easy as that. How big does it move? Well, you got to look at the range, okay, of the expectation. If it's outside the range, you get a bigger move. That's why it's always good to know what the range is. So this is, you know, I don't want to sort of overcomplicate things, but what you need to do is, the most important thing when you come to an event like this is not overcomplicating things, right? If you're trading, looking to trade currencies, don't trade all of them, right? If you're trying to hit every currency pair with maximum risk, you are mistaken. That is not the right thing to do. You try and find the best pair, or maybe the best two, and you diversify your risk across those two pairs, right? Don't go and try and hit 4 or 5 pairs. If you go in with spraying orders all over the place, it's like spray and pray, right? It's not the way to trade. Work out where the best technical setups are, and that's where the answers will be, right? So the best thing you can do leading up to the numbers, okay, is plan out what you expect. If I can just get that trend line on there. What you expect to happen on a strong number, what you expect to happen on a weak number. Now, it's very hard to anticipate both sides of the market. So work out where, for you, where the easiest trade is to execute, okay? Whether you're trading live or using pending orders. Now, if you're using pending orders close to the market, just be aware there's going to be massive volatility at the time of the release, so you can get kicked in and out. You want to make sure you've got plenty of room to move with your order entries going into these numbers. Now, equity indices, massive, right? This is going to be a massive number for those. But the market doesn't open for like half an hour afterwards. So you've got to almost wait to see what happens on the numbers, and then the equity markets will explode. I can tell you, if we get strong CPI numbers, the equity markets are going to get crushed, right? If we get weak numbers, okay, it's the foot off the throat, equities rally. So the equity markets would be a go-to. But make sure you go through all the pairs. And if you come into a specific instrument, like, there's no need to go through all the crosses here on the currencies, because this is a dollar-related event, okay? The smartest thing you can do, get all your technical levels set up, work out which instrument would work best for a weak dollar move, maybe one that gets set up for a strong dollar move, and then you can sort of start to piece together where the opportunities are. Then as it gets closer to the event, right, let me just change screens here. Okay, then you can sort of coming in looking for market familiarity, if I can get that word out. What we're looking for is like the US futures here at the moment are up. Okay, is that giving us a risk on day? At the moment, it's not, right? Now, these things haven't hardly moved, the currencies, but I tell you what, they're not sort of naturally uniformly working that way, because you can see here, equities are rallying and the dollar's rallying, the dollar pairs. Okay, that usually it's the dollar block. So that's the opposite way around. So with that, these are things I look at to gauge how confident am I in what the market's doing, on the behavior of the market. If it's not acting normally, say for a risk on risk off day, I'll reduce my overall risk on the US CPI number. So don't put all your eggs in the one basket. If the market, say market profile is working very nicely, say we had a risk on day, Euro, Sterling, Aussie and Kiwi were rallying, the dollar was falling, maybe you had other pairs lining up the same way against the dollar instruments, okay, commodities, safe havens, whatever it might be, that would give you more confidence. You could go in with a bit more risk. But just be aware, there's a couple of things here that are our enemy. One is volatility. You cannot remove volatility. These numbers here are so important for the next leg of direction from the Fed that they will create a huge amount of volatility. So treat this release, right? Don't shy away from it, but just plan out what pair can I hit. Ideally, when you're looking at, let me just come back to the charts here for a second. Ideally, if say you're looking at the, say some of these currencies, ideally you're looking for an instrument that's about 20 or 30 points away from a technical level. Now, ideally, what I keep saying that is, say, I mean, this is, down towards parity again, and resistance is up here around sort of just above, what, 90? Okay, that's a long way away. But if you had a situation where you had an instrument, okay, say, 20 points from resistance, and we got a weak US dollar number, right? This is Euro, so it would be going up. Ideally, it gets you triggered, but it hits the pocket of liquidity around the resistance line and gives the market time to stop, take all those people who are selling there and take the currency higher, right? So if we get a strong dollar, the situation is Euro is in the middle of nowhere. And look how far we've got, okay, from parity down to, say, 97, 60, right? 240-point move to the next support level. We get strong US numbers, there's nothing to stop it going down here. So what does that do? The market players look at this and go, wow, that's huge opportunity. What that does is it means everyone's going to load up. So the volatility here, you could expect on strong numbers to be huge initially. Do you get in on that? Maybe. What I would be doing is covering your tail a bit, maybe stagger the position in. If you're looking to set up, say, a pending order, I'd have that at least 15 points away from the current market level, and I'd have a smaller entry position. Because what you want to do, you don't want to happen is, and this is how the market works, the spread, the banks pull their liquidity right at the time of the release, right? So this might be doing, quite nicely, sitting around 10 like it is now, but at the time of the release, there's no liquidity. So it gaps to, say, the price might be 90 on the downside and 30 on the top side, like a 40-point spread instantly. If your orders are within that, you could get kicked in and stopped out immediately. You want to avoid that. So just be aware that can happen. So what do? Reduce your risk, because that's where the major risk is. Now, if you have the opportunity to trade live, you can still use a pending order, but also have a secondary trade, which is you instigating the position. You just need to have a plan here around what you're going to do, right? This is what the course is all about. It's preparing you to execute these opportunities when they come up. And I'm telling you, I haven't seen it as good an opportunity as this, where we've got a huge number, where there's pressure, both sides of the market. They could raise, they could not. And this is because of the non-farm payrolls last week being weak, sets us up for a better opportunity. This is either going to confirm that the market's topping out on the economic cycle, right? I still think it's a bit early for that, but weak non-farms, as in the rate, unemployment rate, weak CPI number, okay, the dollar's going to come off, right? It will just get hammered. If the number comes around strong, it diminishes last Friday's non-farm payrolls, and the dollar kicks into gear on the top side again, right? So it's right in the balance. The good thing is it's not only on the balance fundamentally, it's also in the balance here technically on a few pairs. So make sure you do your work, right? And I'm not talking 5 minutes before. Get your charts up whenever you can over the next, 6, 10 hours, 12 hours, whatever it might be. 10 hours, I'd say, would be good enough. Get your charts so you can actually fine tune all of them. So you don't need to think about which pair to hit when it comes time to trading. You're just trading. Okay, so I'm just sort of being a bit finicky there, trying to get these charts. So what I will do through the course of the day is I'll just go through here and fine tune all my levels so I know exactly where support and resistance is. I'll know exactly how far they are to trend lines, and that'll help me strategize the execution, okay, of the opportunity. And it's going to make things a hell of a lot easier for you, because you're going to have enough to think about. And if you've been trading or if you haven't been trading long, there's a rise of pressure, anxiety, okay, at the time of the release. Preparation will take away the anxiety, and it will become more exciting because you're looking to make money as opposed to potentially get kicked out of a trade. All right, this is not for the faint-hearted. If you can't handle the number coming out, and if you don't have a service which releases the number instantly, well, you are out of the game, right? Of course, you could use pending orders, but you won't know how to manage them if you don't know what the numbers are, right? That's the key to it. If you are looking for some more answers around what the data is, come into this week's data here on the 247 Trade Zone, and you can download the file there, and you'll see the numbers. It'll help you plan the opportunity a little bit better. Okay, so that's it, right? All we're going to do is wait. You're going to wait 12 hours, 13 minutes. We get the numbers, you trade. Okay, don't get caught up in the whole emotional side of things. It's an opportunity. Are you going long? Are you looking for a strong dollar or a weak dollar? Or are you going to try and cover both bases and go cover long and short? If you're doing that, I'd decrease the risk. But I tell you what, it's probably one of those ones which is worthy of an opportunity. Just be aware, if you're putting orders, pending orders, closer than 15 points either side of the market, you are asking for trouble, right? So that's all I can say to you as far as that. And as I say, preparation meets opportunity. That's what it's all about. All right, guys, good luck. If you have any questions, jump on the 247 Trade Zone here. This is the time to start discussing it and flushing out any issues you may have or uncertainties. How do I execute? What do I do? That's what this is for. All right, guys, have a good one. All the very best if you're trading. Good luck out there.